All right. We had a very exciting week, and volatility is back in this market, which is going to be very good for you traders that are looking for quick swings higher and lower. In bigger picture, I am very confident this is still a bull market. My confidence level that this is still a bull market is over 90%, which means after this pullback, I am expecting the bull market to continue to go higher, and I am viewing this pullback as an opportunity to get low risk entries into longer term swing trades. But if you are a trader that is only focused on the very short term, you do need to acknowledge this pullback could go a bit deeper. However, as you'll see with today's analysis, I'm also thinking there's a very good chance this pullback is likely already near an end, and we're likely closer to a bottom of this pullback than a lot of people realize. And once more, during this pullback, people are starting to get bearish, saying the top is in and we're going a lot lower. And I will remind you again, which I have been reminding the bears for 2 years now, that is a mistake that can cost you a lot of money if you're not focused on the bigger picture. So short term here, if we look at SPY, we have only pulled back nearly 3%, which is totally normal and completely healthy. 3 to 4.5% pullbacks along the way in a bull trend are very common and very healthy, because all bull trends eventually need higher lows before they continue higher. And if we look at this price action, we simply pulled back to the breakout of the previous all-time high at 548, which is a very healthy breakout retest. And if we are going to continue higher, this is a perfect place to do so from. So in the short term, manage your risk at 548. You can buy the dip above this level. And then if we break below 548, you should be prepared for a trip down here towards 542, which is also going to test the rising 50 EMA. If we hold 542 or 548, we are likely going right back into the bull trend, which is going to at least push us to 562, but more than likely that brand new all-time high price target just below 570. So 548 and 542 are great risk levels for bulls to buy the dip from. But if you are still convinced that this is going lower and you want to be a bear, you can stay bearish below 556 or below the breakdown of the 20 daily moving average below 552. So if you think I'm wrong and you want to go against what I think, then you're staying short below 552 and 556. But to make it very clear where I stand, I am bullish, and I think these are buy the dip opportunities from these strong support zones, because it's so easy to manage risk and it is a bull trend. So we want to focus on the direction of the trend, which means long trades are still the best trades to be making. On the NASDAQ 100 triple Qs, we were down 0.89% on Friday. And just like SPY, I think we are very close to the end of this pullback. From the all-time high, we have pulled back about 5.5%. And the triple Qs are a lot more volatile than the S&P 500. And there is a lot of money rotating out of tech stocks, but that rotation is going to be short-lived and likely come to an end very soon. So the critical risk level in the triple Qs here is 474. And if we break down below that, we will be looking for that gap fill at 468. And remember, that is a 100% guarantee that that gap is going to fill. We just have no idea the exact date, but that doesn't mean it has to come now. As I will continue to remind you, it is possible we continue higher to either close the gap at 493 or make another brand new all-time high and then still come down and fill that gap at a later date. So yes, that gap will fill, but it's still going to be very painful if you're shorting for that gap fill and we make another new all-time high before we come down and fill that gap. Now, it is possible we just go straight down and fill the gap while we're here, but it is going to require a breakdown below the rising 50 EMA on the daily chart, and that will be the breakdown below 473. And then of course below that, it should be an easy shot to fill the gap. So there's two ways to play it. You're either buying the dip at these risk levels and support here, or you are staying risk off and bearish below 491 or the negatively sloping 20 daily moving average, which is now 487. Again, it doesn't matter either way. You have risk levels to be a bear and you have risk levels to be a bull. But I will remind you, it is a lot easier to be a bull in a bull market, especially if this is just a pullback before we continue to make new all-time highs. If you want to be bearish, it's completely fine. You do whatever you want, just manage your risk. And if we start to break those risk levels and look a lot more bullish, remember the fact that we could just continue to push higher within this bull trend, which means it's going to be very risky to be holding short positions. On the Dow Jones, we were down 0.93% on Friday, and we did close the gap down here right around 403, and we are hitting the breakout of the previous all-time high, which is down here between 400 and 402. So just like SPY, this could be a simple retest of the breakout before we continue higher, and I'm very confident that is what's playing out here. So we did hit all of the price targets that I gave you at 402 and 407, and then we got very close to the one at 415, but now we are starting to pull back. So from here, what I want you to watch is for that retest of 400, because at that retest of 400, we will likely find the support and then start pushing higher towards 420. I am very confident that Dow Jones is going to 420 very soon, so this is a great opportunity as we're pulling back into these very low risk entries between 398 and 402. That is a very low risk entry for a very high reward as we push higher towards 415 to 420. So look for these breakout retests to hold, and that means the bulls are still very strong and they're buying at the low risk entries, and that's going to push us higher yet again to new all-time highs. On the Russell 2000 IWM ETF, we were down 0.51% on Friday, and just like the Dow Jones, we are getting that pullback to retest the breakout, which could take us back down to 210, but I don't think we're going to make it all the way down to 210. I think there's a better chance that we're going to find support somewhere between 211 and 215, which means if we fill this gap, that's likely as low as we're going to go before we push higher towards that price target at 228. Now keep in mind, I've had this 228 price target that takes us out to September, so it could take more time than I'm showing here. But I just want you to be aware, once we get this pullback, it is very likely that is going to be our higher low before we continue to push higher to hit that price target at 228. And I do think we can go even higher than that. On the ARKK ETF, we were up 0.13% on Friday, so we're not seeing the same amount of selling here, and we're already finding support. And this should look a lot like IWM, where we are going to find a higher low somewhere at this breakout retest, and then continue to push higher to make yet again another new high. And this is because you're getting that risk on sentiment now in those small cap names, which are in the ARK ETF as well. But once more, I'll remind you, this is not an ETF I think you should be trading, but it is a good indication of risk on sentiment. So if we can hold this support at 45.7 and push higher towards the 50s, that is definitely going to look like a risk on bull rally, and it's going to show a more broad-based market breadth rally. On the VIX, we closed at 16.5 on Friday, and I still think the VIX is going to crush from here. As we are hitting critical support in the indices and we start to bounce, expect the VIX to start crushing down towards 13 yet again. If we break through critical support and get high volume panic selling, then we expect to see the VIX up here in the 18 to 20 range. On Bitcoin, we're currently trading at 67,000, and Bitcoin did nearly exactly what we expected, which was on this bull breakout to hold the retest above 63 to 64,000 and then push higher to 67,000. So once more, I will remind you, this is very risk on sentiment that we're seeing in Bitcoin as we continue this bull trend. And you can see very clearly now we have a very well-defined bull trend, and we are starting to get very impulsive bullish price action on very nice buying volume. So it's very hard to say that Bitcoin is not bullish right now, and the next bull breakout will be above 67,000. And then above 67,000, look for a push to the top of the range at 71,400. On Nvidia stock, we were down 2.61% on Friday, and we're trying to find support above the rising 50 daily EMA right around 116 to 117. And this is a very healthy consolidation, and I love to see this in Nvidia because this by far is the market moving tech stock. And this has been the strongest market leader that we've had, stronger more so than even Apple and Microsoft. And now to see it consolidating and digesting this very parabolic bull rally is building up energy for the next bull run. So right here, I think you could be long above 116, but do understand if we break down below this support between 115 and 116, that does mean we could come all the way back down towards 106 to 110. So you can manage risk right here, right around 115 to 116. And you can stay bullish above that, but do keep in mind below that, we could be going for that next leg lower. I do think that next leg lower, if it occurred, would be the bottom, and I don't think we would go much lower, but we'll have to watch the price action and adjust accordingly as we see more and more price action each and every day. The next bull breakout I want to see will be a push all the way through this gap fill at 125, and then I would want to see the bulls get back above 126 to 127 and hold above it, and that should be signs that we're getting ready for another bull rally. So there's lots of ways you could trade this. I do think accumulating for the longer term is the best idea because it is still very bullish. And during a very bullish consolidation like this, which is looking like a giant bull flag, that is when you're getting those low risk entries before the next bull market. So remember, lots of bull rallies have been missed this year. Bears are continuing to get it wrong and calling for tops, and every pullback has been a buying opportunity before we go higher. So the best risk reward is still favoring the bulls and still favoring these bull trends. On Tesla stock, we were down 4.02% on Friday, and I told you we were building out that little bit of a wedge or consolidation, and if we broke down below it, we would likely go fill this gap at 231, and we did break down below it, so it looks like we will come down here and fill this gap at 231. As long as we hold support here, I think that's a buying opportunity as we continue to push higher towards 289. If we can't hold 230, we do have another gap to fill right around 213. On Apple stock, we were up 0.06% on Friday, and I think Apple is a buy the dip here between 218 and the rising 20 daily moving average right around 222. So this is a low risk opportunity to get Apple stock going into earnings for the price target up here at 232. And I actually think we're going to make a brand new all-time high and get into the 240s. But we will want proof that we could break through 234 before we assume that. So buy the dip above 218, price target 232, going into earnings looking very solid and very bullish. So jumping back over to the S&P 500, this is a bull trend until it's not, and we're sitting at critical support within a bull market. So this is where the buyers are going to step up, and this is where we are going to see the bulls continuing to push higher. And it's only if the bears are extremely strong that the bulls are going to fail. And if the bulls fail, we will be looking at this market as a deeper pullback into a deeper correction. However, right now, this is just a completely normal and healthy pullback of a very modest amount, and this is giving opportunities for new money and new bulls to enter the market at lower prices, and that is going to continue to fuel this bull market as bears continue to call for tops and short this market, and then short squeeze the market to higher and higher prices. Be very disciplined. It's okay if you're shorting, but it's not okay to short without a risk management strategy, which means even if you're shorting, if price action proves you wrong and breaks through resistance and starts to push higher, you will lose a lot of money if you continue to hold those short positions in a bull trend. So it doesn't matter how you're trading, it goes for you bulls too. If this breaks down and starts a stronger bear trend, you need to have the same amount of flexibility as the bears and move like water, which means no matter what you are doing, risk management should always be part of your strategy, because you can never be profitable if you let your losers become larger than your winners. We are absolutely crushing this market, blowing out all of the indices by extreme margins, by simply getting into the highest probability trades to win, by going with the direction of the trade and getting those low risk entries with very high reward. If you want to come crush this market with us, you can join the Stock Channel Discord server, where you will get access to all of my trade ideas, my technical analysis, and all of my intraday updates. We are absolutely crushing this market, and you can come crush the market with us, and you can find out how to join my Discord server by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.